NoNet More Crank, High Voltage Indicator Full Review Voiceover Script, approximately 10 minutes English. NoNet Jamawasi, welcome back. Today we're doing a full, honest breakdown of a trend-following indicator called Crank, subtitled High Voltage, built for TradingView by FX Pro Systems. If you're into Forex, crypto, or just want to understand how modern trend tools are built under the hood, stay until the end, because this one combines 3 different techniques into a single trend engine, and we're going to unpack every single one of them. Before we dive in, if you find value in breakdowns like this, hit subscribe and tap that like button. It genuinely helps NoNet grow and keeps this kind of free, in-depth content coming every week. What Crank actually is. At first glance, Crank looks like just another colored trend cloud. Candles that flip between green and red, a moving line running through price, and a shaded band around it. But underneath that simple visual, there are 3 separate filters working together. An EMA crossover for raw direction, a volume-adjusted normalization layer for momentum strength, and a CCI filter for extra confirmation. Only when enough of these agree does the trend actually flip. Let's go through each piece. Layer 1, the EMA crossover. The foundation is a classic fast and slow EMA crossover. By default, an 11-period EMA against a 28-period EMA. When the fast EMA sits above the slow EMA, the raw direction reads bullish. When it's below, it reads bearish. This is nothing new. Traders have used EMA crossovers for decades. But here, it's only the first vote out of 3, not the final signal. Sitting alongside it is a 56-period EMA called the basis. This is the actual line you see plotted on your chart, and it's the anchor that everything else, the bands, the candle coloring, is built around. Layer 2, volume-adjusted normalization. This is where Crank gets more interesting. It takes the distance between price and that 56-period basis line, then divides it by the standard deviation of price over the same look-back, multiplied by a normalization factor of 1.6. In plain terms, it's measuring how far price has stretched away from its average, scaled so that number stays consistent across any asset or time frame, whether you're on Bitcoin or a low volatility Forex pair. But Crank doesn't stop there. It also factors in volume. It calculates an RSY of volume itself over an 8-period length, turning it into a ratio around 1.0. If volume is running hot compared to recent history, that ratio rises above 1 and amplifies the normalized reading. If volume is quiet, the reading gets dampened. The idea is simple. A price move backed by strong volume deserves more weight than the same move on thin volume. Once this volume-adjusted number crosses a threshold, 0.2 by default in either direction, it's counted as bullish or bearish momentum. Below that threshold, momentum is considered too weak to matter. Layer 3, the CCI filter. The third and final layer is a commodity channel index filter, calculated over 28 periods. CCI measures how far price has moved from its statistical average, and here it acts purely as a confirmation gate. If CCI is above 100, that supports a bullish call. If it's below -50, notice that's an asymmetric threshold, not a mirror image, that supports bearish. This filter can be toggled off entirely if a trader wants a faster, less filtered signal. How the trend state actually flips. Here's the real engine of the indicator, and it's worth pausing on. Crank doesn't just repaint the trend every bar based on whatever the latest reading says. Instead, it holds a persistent trend state. That state only flips to bullish when all 3 conditions align at once. The EMA crossover says bullish, the volume-adjusted normalization is above its threshold, and, if enabled, CCI confirms it too. The same triple condition logic applies for a bearish flip. If those conditions aren't all met, the trend state simply carries over from the previous bar. This is a deliberate design choice to reduce whipsaws. The constant false flips you get from indicators that react to every small wiggle in price. The trade-off, and it's an important one, is lag. Because the trend won't flip until 3 separate conditions line up, Crank will always confirm a new trend later than a raw single EMA crossover would. Reading the chart visually, the basis line and the candles themselves are colored using a gradient. The stronger the normalized momentum reading, the more saturated the color. A pale, washed-out green or red tells you the trend is technically in place but weak. A bold, fully saturated color tells you momentum is strong and stretched. Around the basis line, you'll also see a shaded band, which widens or narrows based on volatility, and that same volume adjustment. Think of it as a dynamic envelope showing the expected range around the trend. When the trend state actually flips, Crank drops a small triangle label, bull below the candle, bear above it, marking the exact bar where all three filters agreed. There are also built-in alert conditions, so you can get notified automatically the moment a flip happens instead of watching the chart all day. By the way, if this kind of deep indicator breakdown is useful to you, drop a comment telling us which indicator you want reviewed next. NoNet reads every comment, and it genuinely shapes what we cover. Strengths. The biggest strength here is the multi-confirmation design. By requiring EMA direction, volume-weighted momentum, and CCI to all agree, Crank naturally filters out a lot of the noise that trips up simpler trend tools, especially in choppy sideways markets. The volume adjustment is also a genuinely useful touch. Most basic trend indicators ignore volume completely, and folding it into the normalization math gives a signal more context than price alone would provide. Weaknesses. The honest trade-off is lag. A three-condition system, by definition, confirms trends later than a single moving average crossover would. In fast-moving, high-volatility conditions, the kind the high-voltage name is hinting at, you may already be well into a move before Crank officially flips. It's also worth noting this is a lagging trend confirmation tool, not a predictive one. It tells you what's already happening, not what's about to happen. And because the CCI thresholds are asymmetric, 100 on the upside, -50 on the downside, the bullish and bearish conditions aren't mirror images of each other, so backtesting both directions separately matters before you trust it equally in both. A practical way to trade. A sensible approach is to treat Crank as a trend filter rather than a standalone entry signal. Wait for the trend state to flip and the bull or bear label to appear, then look for a pullback toward the basis line or the inner edge of the shaded band before entering in the direction of the new trend, rather than chasing the signal candle itself. The bandwidth can also double as a rough volatility gauge. A band that's expanding tells you the move has real strength behind it, while a band that's flattening out can be an early warning that momentum is fading before the trend state even flips. As always, no indicator should be your only decision maker. Combine it with proper risk management, a clear stop-loss plan, and ideally a higher time-frame trend check before you commit to a trade. Wrap up, so that's Crank, high voltage, fully broken down, an EMA crossover for direction, volume-adjusted normalization for momentum strength, and a CCI filter for confirmation, all locked behind a sticky trend state machine designed to cut down whipsaws at the cost of some lag. If this breakdown helped you understand the indicator better, smash that like button, subscribe if you haven't already, and share this with a fellow trader who'd find it useful. That's it for today's NoNet Deep Dive. See you in the next one. End of script. Approximately 1,500 words / approximately 10 minutes at natural pace.